Welcome back to the Deep Dive. Today we're going to be diving deep into high net worth individuals and what's shaping wealth management in 2024. So we're looking at the World Wealth Report 2024 to get a sense of how the industry is changing. You know, it's interesting, after a rough couple of years, global HNWI wealth actually bounced back almost 5% in 2023. It even surpassed 2021 levels. So today we're going to unpack what drove that resurgence. We'll look at the role of AI in wealth management, and we'll explore the growing influence of family offices. So let's dive in.
Yeah, and one thing that really stands out is that this rebound wasn't just, a general rising tide. North America had a particularly strong surge. HNWI wealth there jumped over 7%. That really suggests some region-specific factors are at play.
So what's behind this impressive growth in North America? Is it just the markets bouncing back?
Well, that's definitely part of it. The rebounding equity market, particularly the tech sector, which was fueled by the AI boom, played a big role. But there's more to it than that. Government spending initiatives, especially in the U.S., have injected a lot of capital into the economy. And we're also seeing early signs that inflation is cooling down, which is boosting investor confidence.
That makes sense. Those magnificent 7 tech stocks we kept hearing about last year really seem to have driven a lot of those market returns. But, even though markets are recovering, there's still so much uncertainty out there. How are HNWIs navigating this volatility?
That's where the real art of wealth management comes in. It's not just about riding the waves of the market. It's about making strategic decisions that align with long-term goals, even when there's uncertainty.
It's amazing how much psychology influences investing. The report actually digs into behavioral finance, highlighting that even the most experienced investors can be swayed by their emotions and biases. Over 65% of HNWIs admit that their decisions are influenced by these biases. Like, remember the whole GameStop frenzy a few years ago?
Oh, absolutely. The GameStop saga was a perfect example of how behavioral biases, things like herd mentality and FOMO, can really drive irrational market behavior. And what's interesting now is that AI is entering the picture.
AI? How is artificial intelligence changing the game in wealth management?
It's completely changing how wealth managers understand their clients and how they interact with them. Imagine being able to analyze not just financial data, but also things like social media posts, news articles, even online shopping habits.
Unstructured data. So AI is looking at what people are posting on social media to understand their financial behavior.
Exactly. AI can sift through massive amounts of data, including these seemingly unrelated online activities. It uses this to build incredibly detailed client profiles. This allows wealth managers to understand not just a client's financial goals, but also their risk tolerance, their emotional triggers, and even their susceptibility to certain behavioral biases.
Wow, that sounds like something out of a sci-fi movie. But how does this actually translate into practical advice for investors? What can AI actually do for me?
It can personalize wealth management in ways we've never seen before. Think about it. AI can analyze your individual risk profile. It can tailor investment strategies to your specific goals. And it can even nudge you away from making those impulsive decisions that are driven by emotion. It's like having a super intelligent financial advisor available 24/7.
So it's becoming like a personal wealth management assistant? That's pretty mind-blowing.
Yeah.
But what about those with really substantial portfolios, the ultra-high net worth individuals? Are they embracing AI, or are they sticking with those traditional wealth management firms?
That brings us to another fascinating trend, the rise of family offices. These private wealth management structures are attracting more and more ultra-high net worth individuals. Those with over $30 million in assets.
Why are family offices becoming so popular, especially among the ultra-wealthy? What's the draw?
They offer a level of personalization and control that traditional wealth management firms often struggle to match. Family offices can manage everything from complex investments and philanthropy to lifestyle management and even passion investments.
Passion investments. What are those exactly?
Think art collections, rare wines, classic cars, or even private equity stakes in emerging businesses. These are investments driven by personal interests and values, not just purely financial returns.
So aligning your wealth with your passions, that makes a lot of sense, especially for those who have already achieved a significant level of financial success. The report actually mentions that a whopping 93% of ultra-high net worth individuals use family offices for at least some services. That's a huge shift away from traditional wealth management firms. Are traditional firms doomed?
Not necessarily. Savvy firms are adapting by expanding their service offerings and forming strategic partnerships.
Partnerships? You mean they're collaborating with family offices?
Exactly. Many wealth management firms are realizing they can't be everything to everyone. They're focusing on their core strengths like investment management, and regulatory compliance, while partnering with family offices to provide those specialized services that cater to the unique needs of ultra-high net worth individuals.
So it's becoming more of a collaborative ecosystem rather than a cutthroat competition.
That's precisely where the industry seems to be heading. Traditional firms bring their financial expertise and resources to the table, while family offices provide that tailored, personal touch that the ultra-wealthy are seeking.
This has been incredibly insightful. We've covered a lot of ground, from the recovering markets to the rise of AI and the growing influence of family offices. It's clear that the wealth management landscape is evolving rapidly. But what does it all mean for the average investor, for someone who isn't necessarily in the ultra-high net worth bracket?
That's a great question. And it brings us to a topic that's increasingly relevant for investors of all levels: ESG investing.
ESG, environmental, social, and governance investing, has become such a hot topic recently. But is it really living up to the hype? Is it more than just a feel-good trend?
That's a question many investors are grappling with. And the World Wealth Report 2024 actually sheds some light on this. While HNWIs continue to show strong interest in ESG investing, many are demanding greater transparency and accountability. They want to see tangible results and measurable impact.
So it's not enough for an investment to be labeled as ESG. Investors want proof that it's making a real difference.
Exactly. They're becoming more discerning, and they're pushing for better metrics to track ESG performance. It's no longer just about ticking a box. It's about ensuring that investments align with their values and contribute to positive change.
This makes sense, especially with all the talk about greenwashing and misleading claims in the ESG space. But with so much uncertainty and evolving standards, how can investors be sure they're making informed decisions?
That's the challenge. And it's driving a push for greater regulation and standardization in the ESG space. Investors are demanding clear guidelines and reliable data to make informed decisions.
So it's about moving beyond the hype and ensuring that ESG investing is truly delivering on its promises.
Absolutely. The future of ESG investing hinges on transparency, accountability, and measurable impact.
That's encouraging to hear. But I'm also curious about another demographic shift: the changing face of wealth. We talked about ultra-high net worth individuals, but what about the broader investor landscape? What does the report tell us about generational wealth transfer?
Generational wealth transfer is a major force shaping the wealth management industry. Trillions of dollars are expected to change hands in the coming years as baby boomers pass on their wealth to younger generations.
That's a seismic shift. So how are wealth management firms adapting to the needs and preferences of these younger investors?
They're recognizing that millennials and Gen Z have different priorities and approaches to wealth management. These generations are more tech-savvy, socially conscious, and focused on long-term sustainability. They want to invest in companies that align with their values and make a positive impact on the world.
So it's not just about understanding their financial goals, but also their values and worldview.
Exactly. These generations are demanding more than just financial returns. They want their investments to reflect their beliefs and contribute to a better future. They're also more comfortable with technology and expect seamless digital experiences.
This has been a fascinating deep dive into the world of wealth management. It's clear that the industry is at a crossroads shaped by new technologies, changing demographics, and a growing awareness of social impact.
You've hit the nail on the head. The world of wealth management is no longer just about maximizing returns. It's about aligning investments with values, leveraging technology for greater personalization, and navigating a complex, ever-changing world.
Well, I think we need to take a quick pause here. But don't go anywhere. When we come back, we'll be diving even deeper into some of the key challenges and opportunities shaping the future of wealth management.
We'll explore how wealth management firms can leverage their capabilities to create new revenue streams, particularly in the family office space.
And we'll leave you with some thought-provoking questions about your own financial strategy and how you can apply these insights to achieve your personal goals and values. Stay tuned.
Welcome back. Before the break, we were talking about how these wealth management firms are adapting to this new landscape. It's not just about keeping up with markets anymore. It's about meeting the evolving needs of clients, especially those ultra-high net worth individuals.
Yeah, you're right. The ultra-wealthy seem to have a whole different set of expectations, and they require a level of service that goes way beyond just traditional investment management.
Exactly. And that's where this concept of the one-stop shop is becoming so important. To complete with the kind of personalized services that family offices offer, wealth management firms are transforming. They're becoming these comprehensive providers, offering a full suite of services, both financial and non-financial.
So it's not just about managing investments anymore. It's about managing lifestyles, passions, legacies.
Absolutely. Ultra-high net worth individuals are looking for partners who can handle it all. From complex investment strategies and estate planning to philanthropy concierge services, even things like art collection management.
That's quite a range. How are wealth management firms building the capacity to offer such a diverse range of services? Are they creating all this expertise in-house?
It's a mix of in-house expertise and strategic partnerships. They're leveraging their existing strengths in areas like investment management and financial planning, but they're also collaborating with external providers to offer specialized services that they might not have in-house.
So they're building this ecosystem of trusted partners who can cater to the diverse needs of these ultra-wealthy clients.
Think of it as a curated network of experts all working together to provide a seamless and very personalized experience for the client.
That makes sense. We've talked about AI. Are there other technologies shaping the future of wealth management?
Oh, absolutely. Technology is playing a huge role in this transformation. We're seeing a growing emphasis on data analytics, cloud computing, and blockchain technology.
Okay, break it down for me. How are these technologies actually being used to improve the client experience?
Well, data analytics helps wealth managers understand client behavior, identify investment trends, and personalize their advice. Cloud computing gives them the flexibility and scalability to manage huge amounts of data and deliver services on demand. And then blockchain technology is offering exciting possibilities for things like secure transactions, asset tracking, and even fractional ownership of alternative investments.
It sounds like technology is really revolutionizing how wealth management is delivered. But with all this innovation, what are some of the challenges that firms are facing?
Well, one of the biggest is attracting and retaining top talent. To succeed in this new world, firms need skilled professionals who are comfortable with these cutting-edge technologies. They need to understand the nuances of different client segments and be able to provide that exceptional personalized service.
So it's not just about financial expertise anymore. It's about having a diverse skill set that combines technology, relationship building, and a deep understanding of the ultra-wealthy.
You got it. Finding and keeping those individuals is crucial. And then there's also the regulatory landscape, which is constantly changing. Especially in areas like data privacy and cybersecurity, firms need to stay ahead of these regulations while also innovating and providing top-notch service.
It sounds like a tough balancing act. But despite the challenges, there must be some exciting opportunities emerging in this evolving landscape.
Oh, there definitely are. One area that has immense potential is the personalization of alternative investments. Ultra-high net worth individuals are increasingly looking for unique and non-traditional assets. Things like private equity, venture capital, and as we discussed earlier, those passion investments.
Right, those passion investments, things like art, wine, and collectibles. But how are wealth management firms helping their clients navigate these complex and often illiquid markets?
You're building specialized teams, partnering with experts in those fields, and even using technology to provide greater transparency and access to these markets.
So it's about demystifying alternative investments and making them more accessible to a wider range of clients.
Exactly. And another area that's ripe with opportunity is the intersection of wealth management and technology. We're seeing a surge in fintech startups that are offering innovative solutions for everything from robo-advisory to digital asset management.
Are these fintech companies disrupting the traditional wealth management model, or is it more collaborative?
I'd say it's leaning more towards collaboration. A lot of wealth management firms are actually embracing these new technologies. They're partnering with fintechs to enhance their offerings and provide a more seamless digital experience for their clients.
It sounds like the future of wealth management is all about partnerships, both with other firms and with technology.
Absolutely. The firms that can successfully build these ecosystems are the ones that are going to thrive in the years to come.
This has been incredibly informative. We've explored how wealth management firms are evolving to meet the changing needs of their clients and how technology is reshaping the industry. But let's shift gears now and dive into a topic that's been woven throughout our conversation: the dynamic relationship between wealth management firms and family offices.
It's a fascinating dynamic, wouldn't you say? On the one hand, you have these well-established wealth management firms with their global reach, deep financial expertise, and robust regulatory frameworks. And on the other, you have family offices, these private agile structures offering hyper-personalized services tailored to the unique needs of ultra-high net worth families.
It's like two different worlds, each with its own strengths and weaknesses. So are they competing for the same clients, or is there room for collaboration?
That's the million-dollar question. And the answer, as with most things in wealth, is nuanced. We're seeing elements of both competition and collaboration emerging, creating a really dynamic and evolving landscape.
Okay, let's unpack this a bit. What are the key areas where family offices are outpacing traditional firms?
One key area is providing those non-financial value-added services we discussed earlier. Things like concierge services, lifestyle management, philanthropy coordination, even managing those passion investments. These are areas where traditional firms haven't always been as strong.
It's like family offices are taking a more holistic approach. They recognize that wealth management is about more than just investments. It's about managing every aspect of a family's life and legacy.
Precisely. And another area where family offices really excel is in understanding family dynamics and facilitating intergenerational wealth transfer. They can provide a level of intimacy and personalized attention that's difficult for larger firms to replicate.
Right. It's like having a trusted advisor who's not just managing your money, but helping you navigate those complexities of family relationships and ensuring a smooth transition of wealth to future generations. But traditional wealth management firms still hold a significant advantage in areas like investment expertise, access to global markets, and robust regulatory compliance.
They do, and that's why we're seeing more and more partnerships emerge, with family offices leveraging the strengths of these larger firms.
So we're seeing family offices partnering with wealth management firms for specific services.
Absolutely, it's becoming increasingly common. Family offices might partner with firms for investment management, custody services, or even cybersecurity expertise. It allows both structures to focus on their core competencies.
That makes a lot of sense. But I'm also curious about the wealth management firms that are building their own in-house family office capabilities. Are they trying to compete directly with independent family offices?
It's definitely a strategic move. By offering family office services, these firms can cater to a wider range of client needs, attract those ultra-high net worth individuals who might otherwise go elsewhere, and generate new revenue streams.
So it's less about competition and more about meeting evolving client demands and staying ahead of the curve.
Precisely. The wealth management landscape is always changing. And those who can adapt and innovate will be the ones who succeed in the long run.
This is all incredibly insightful. We've explored how wealth management firms are evolving to meet the changing needs of their clients and how technology is reshaping the industry. But let's bring it back to our listeners. What does this evolving relationship between wealth management firms and family offices mean for the average investor?
That's a great question. While family offices are typically reserved for the ultra-wealthy, the trends we see emerging have implications for everyone. The emphasis on personalization, holistic wealth management, and the integration of technology are shaping the entire industry.
So even if you're not a multimillionaire, you can still benefit from these trends.
Absolutely. As technology continues to advance and wealth management firms strive to provide more personalized services, even those with more modest portfolios can expect to see a greater emphasis on customized financial planning, goal-based investing, and seamless digital experiences.
That's encouraging to hear. It sounds like the future of wealth management is moving towards greater accessibility and personalization for everyone.
That's certainly the direction we're heading in. And it's an exciting time to be in this space, as we witness the convergence of traditional wealth management expertise with cutting-edge technologies and evolving client expectations.
Well, on that note, I think it's time to wrap up our deep dive into the world of wealth management.
We've covered a lot of ground today, from recovering markets and the role of AI to the rise of ESG investing and the evolving relationship between wealth management firms and family offices.
We've explored how these trends are shaping the industry and what they mean for investors of all levels. I hope you found this journey as fascinating as we have.
And I'll leave you with this final thought. The key to successful wealth management in 2024 and beyond is finding the right partner, one who understands your unique needs, goals, and values.
Whether that's a traditional wealth management firm, a family office, or a combination of both, the most important thing is to be an informed investor and make choices that align with your vision for the future.
So take some time to reflect on what you've learned today. Ask questions, and don't be afraid to seek out expert guidance. The world of wealth management is full of possibilities, and with the right knowledge and support, you can achieve your financial goals and create a lasting legacy.
Thanks for joining us on this deep dive. Until next time, keep learning, keep exploring, and keep diving deep.
Welcome back to the Deep Dive. Before we wrap things up, I really want to zero in on this dynamic we've been talking about between traditional wealth management firms and those increasingly popular family offices.
Yeah, it's a fascinating back and forth, isn't it? You've got those big global firms with all their resources and regulatory know-how. And then on the flip side, you have family offices, these private, agile structures that are laser-focused on the unique needs of ultra-high net worth families.
It's like two totally different worlds colliding, each with its own strengths. So where do they intersect? Are they competing for the same clients, or is there space for both to be successful? That's the big question everyone's asking. And like most things in the wealth management world, the answer isn't so straightforward. We're actually seeing both competition and collaboration, which makes it a really dynamic and evolving landscape.
Okay, so let's break it down. Where are family offices really pulling ahead of traditional firms?
Well, one area is in providing those value-added services that go beyond just investments. Things like concierge services, lifestyle management, philanthropy coordination, even managing those passion investments we talked about, like art collections or vintage cars. Traditional firms haven't always been as strong in these areas.
It's like family offices understand that wealth management isn't just about numbers. It's about managing the entire experience of wealth, including the emotional aspects and the legacy you want to leave.
Exactly. And family offices often excel at understanding the intricacies of family dynamics and how to facilitate intergenerational wealth transfer. They offer a level of personal attention and understanding that's difficult for larger institutions to match.
It's almost like having a trusted advisor who's not only managing your money, but helping you navigate all the complex stuff that comes with wealth and family dynamics. But let's not forget, traditional firms still have major advantages like their deep investment knowledge, access to global markets, and all that expertise in regulatory compliance.
You're right, and that's why we're seeing this rise in strategic partnerships. Family offices are tapping into those strengths by teaming up with traditional firms.
So they're actually partnering with wealth management firms for specific services.
Exactly. It's becoming more and more common. A family office might partner with a firm for investment management custody services or even cybersecurity expertise. This lets both structures focus on what they do best.
Makes sense. But what about the firms that are building their own family office capabilities in-house? Are they trying to go head-to-head with those independent family offices?
It's definitely a strategic move. Offering family office services allows these firms to appeal to a broader range of clients, attract ultra-high net worth individuals who might have gone elsewhere, and generate new revenue streams.
So it's less about direct competition and more about adapting to what clients want and staying ahead of the curve.
Absolutely. The wealth management world is constantly evolving, and those who can adapt and innovate are going to be the ones who thrive.
This has been a fascinating look at how the relationship between wealth management firms and family offices is changing. But before we sign off, I want to bring it back to our listeners. What does all of this mean for the average investor, someone who might not be in that ultra high net worth category?
Great question. While family offices may be designed for the ultra wealthy, the trends we're seeing have implications for everyone. This emphasis on personalized service, a holistic approach to wealth management, and the use of technology is shaping the entire industry.
So even if you're not managing a multi-million-dollar portfolio, you can still benefit from these trends.
Absolutely. As technology gets more advanced and wealth management firms try to tailor their services, even investors with more modest portfolios can expect more customized financial planning, more goal-based investing, and a smoother digital experience overall.
That's encouraging to hear. Sounds like the future of wealth management is about greater accessibility and personalization for everyone.
That's definitely where things are headed. It's an exciting time to be in this field. We're watching traditional expertise merge with cutting-edge tech and those changing client expectations.
Well, on that note, I think it's time to wrap up our deep dive into wealth management. We've covered a lot of ground today, from the role of AI and ESG investing to those shifting dynamics between traditional firms and family offices.
We've explored the key trends that are shaping wealth management in 2024 and what they mean for all investors.
I hope this has been as insightful for you as it has been for us.
And one final thought. The key to successful wealth management, no matter what year it is, comes down to finding the right partner, someone who gets your unique needs, goals, and values.
Whether that's a traditional wealth management firm, a family office, or a mix of both, the important thing is to be informed and make choices that align with your vision for the future.
So take some time to reflect on what we've discussed today. Ask questions, and don't be afraid to reach out to experts for guidance. The world of wealth management is full of possibilities, and with the right knowledge and support, you can achieve your financial goals and build a lasting legacy.
Thanks for joining us on this deep dive.
And until next time,
Keep learning, keep exploring, and keep diving deep.